Hi, this is Andy Hoffman of CryptoGoldCentral.com and the World Crypto Network. It's Saturday morning, February 24th, and today's crypto audio blog is part of my ongoing series of optimistic, realistic podcasts as the Bitcoin community navigates through its first bear market since 2015, which I say in quotes because this morning's price of $9,800 would have been considered a pipe dream 4 months ago, let alone a year ago when it was under $1,000, or 2 years ago when it was under $500. Clearly, the majority of Bitcoin owners have much higher cost bases and thus far more angst and potentially losses than the early adopters pre-2017. Moreover, the most important asset one can possess in cryptocurrency, or should I say Bitcoin, given how vastly favorable its reward risk is to all others, is experience to understand not only how it works and its outlook, but its history, trading patterns, and psychology. Trust me, no one feels the pain of market declines as much as I, and I am an early adopter, as still I look over my shoulder for the next shoe to drop when prices fall, despite knowing Bitcoin can no longer be stopped. However, it's the experience of my 2.5 years of ownership, or more accurately, 4+ years, given that I owned one Bitcoin at Mt. Gox in early 2014, that enables me to see through the thin trading, propaganda, and FUD to the positive resolution Bitcoin's politics, technology, and price have enjoyed the entire 9 years of its existence. That and the same relentless, tireless due diligence I performed through good times and bad in my prior lives in first oil and then precious metals, to understand every publicly available fact and opinion about what I was investing in and become aware of every significant thought leader. Part of that due diligence, I might add, is the publication of these audio blogs, which help me to sort through my thoughts while both directly and indirectly soliciting feedback from the Bitcoin community at large. When I first found out about Bitcoin in 2012, it was a mere curiosity. At the time, I knew absolutely nothing about how it worked and what it could do. As a diehard precious metal advocate, not a gold bug, as I never believed a new gold standard was viable, I couldn't help believing the 21 million coin cap was a sham, i.e., that someone or group couldn't raise it at will if they so desired. However, when I realized this to be unlikely and prices started surging again in late 2013, I joined the Bitcoin bandwagon at Mt. Gox, which, when it burst, soured me on Bitcoin for the next 2 years. However, I continued to casually watch, and finally in early 2016 became convinced once and for all that the problem had nothing to do with Bitcoin but third parties like Mt. Gox. Not that there were many other storage options, as even then offline wallets had not yet been invented, at least to the point of widespread usage. However, my newly found confidence in Bitcoin's 21 million coin cap and blockchain immutability, long before what turned out to be an ugly, terrifying scaling debate was even considered possible, did cause me to thankfully get back in, even if I was forced to hold my Bitcoin at Coinbase. The reason being that given my due diligence since, I refused to believe what occurred at Mt. Gox could stop Bitcoin. From the time I re-entered Bitcoin in January 2016 until SegWit was locked in July 2017 and the Bcash fork failed to split the network a few weeks later, I defined the Bitcoin hodler, literally holding on for dear life through a series of events that at the time appeared very possible to destroy it, to the point that even Bitcoin's leading core developers had no idea what would ultimately happen, given how each new development, politically, technologically, and financially, was unprecedented. From Chinese Bitcoin capital controls and exchange bans, to Bitcoin Unlimited, the SEC ETF disapproval, the Bitfinex hack, Bitmain's user-activated hard fork announcement, the SegWit 2X movement, and the pre-Bcash price plunge, I lost much sleep worrying about if I was wrong about Bitcoin, and consequently, what would I go broke holding on? However, I refused to believe I was wrong, given the unprecedented level of potential Bitcoin had to not only be a life-changing investment, but an unprecedented gift to humanity. In each case, Bitcoin ultimately enjoyed the positive resolution we have come to know and love, particularly when the historic game-changing events noted above of SegWit activation and the Bcash fork failing to split the Bitwork network both unexpectedly occurred within a 2-week period. And yet, even as prices surged thereafter, from less than $2,000 before the Bcash fork to nearly $20,000 5 months later, the amount and breadth of anti-Bitcoin FUD has remained hot and heavy, yielding countless additional price plunges, and for those not versed in the reality of the situation, sleepless nights. Fortunately, Jamie Dimon calling Bitcoin a fraud before subsequently retracting his statement, Bcash repeatedly attacking Bitcoin with blatantly obvious raids and mempool spamming, at one point in collusion with Coinbase and CNBC, the South Korean government on and off again threatening to ban crypto trading, and the US Senate holding crypto regulation hearings don't quite have the same FUD factor as the pre-SegWit, pre-Bcash events. As despite the negative price impacts they have generated at times, I no longer feel the need to hold on for dear life, as I know Bitcoin's blockchain is immutable and that its use case and operability cannot be stopped. To that end, all the news we have dealt with since Bitcoin's price peaked in mid-December and the altcoin sector in mid-January is little more than noise, hyped up by uninformed and/or incentivized journalists, commentators, and analysts as reasons for price declines, when in reality, the sector's woes have little to do with news and everything to do with consolidating the massive gains made in the fall and early winter, which in many cases were bubble-like in nature. And frankly, not a single news item pertaining to Bitcoin has scared me in the slightest, and won't anytime soon, given that the only fears I've ever had about it have been positively resolved. In fact, I'd argue that never in Bitcoin's history has so little been wrong and so much so right, to the point that I have many times deemed this the biggest market correction in history of an asset with not a single thing wrong. In other words, I refuse to believe what is becoming increasingly weak anti-Bitcoin propaganda, given all I have seen and continue to see right now. As for the market action, frankly, I find it to be downright bullish, given just how much has been thrown at it for the past 2 months. The fact that the price bottomed at $6,000, or exactly the $100 billion market cap level that hundreds of deep-pocketed holders consider their minimum investment threshold, tells me there is indeed a Wall Street put at that level. This and the fact that, like the top at $20,000 and closer to $25,000 if the crazy South Korean exchanges are included, the bottom at $6,000 overshot reality, yielding a current equilibrium around $10,000, where it is traded above and below, with the exception of this week's early surge to 11,800 for the past 10 days or so. Moreover, Bitcoin market cap dominance has been rising from a low of 34% last month to 39% today, including significant gains against the numbers 2, 3, and 4 crypto assets, Ethereum, Ripple, and Bcash, which I might add, I deem crypto assets, not currencies, as none have the monetary properties Bitcoin has. To the contrary, they are so not monetary that the biggest crypto scam of all, Bcash, is the most monetarily oriented of the three. To that end, as one would expect after a major market crash like we just experienced, investors are starting to seriously reevaluate what they own, which quite clearly is leading them to slowly but surely sell altcoins in lieu of King Bitcoin. Furthermore, as discussed in my Crypto Civil Wars audio blog from Thursday morning, holders of many of the top-tier coins are starting to show their displeasure at how these centralized coins are being managed via hard forks or the threat of such, a movement that cumulatively plays into Bitcoin's hands by exposing the vast majority of altcoins as massive, broad-based vulnerabilities. To that end, there's no need to refuse to believe the altcoin hype, as based on simple objective observations, it's difficult to see any posting a threat to Bitcoin's principal use case as digital gold in any material way in either the short or long term. Finally, in watching Bitcoin struggle to hold off the myriad sellers in the 9,500 to 10,500 range it has been confined to for the past 10 days or so, I refuse to believe material downside exists, as no matter how much FUD is spread, Bitcoin is one of the cheapest assets I have come across, as much so today as 2 years ago, given how much its value proposition has advanced over this time. To that end, consider that at $9,800, its market cap is still just $160 billion. Chump change compared to the $300+ trillion legacy asset market, including $7+ trillion for gold, whose use case as the top storage of value asset is being severely and rapidly eroded by Bitcoin, which also possesses an insurmountable secret weapon of being the asset of choice of the younger generations who are embracing the digital age as passionately as legacy investors once championed stocks, bonds, and gold. Moreover, of the 16.8 million or so Bitcoins in existence, no more than 3 to 4 million are likely available for sale, at a time when worldwide adoption is rapidly expanding, particularly since the market cap rose above 100 billion, making Bitcoin investable, and in some cases a mandatory holding to essentially all the world's deep-pocketed institutions, some of whom, like the Bank of Japan, are very likely to have been major buyers during the recent dip. As trust me, institutions this large, equipped with unfettered but opaquely reported money printing capabilities, are well aware that the only time they can acquire significant positions without materially moving prices is during times of panic selling, as we saw earlier this month. In fact, one particular Bitcoin address, although it's not confirmed exactly what was going on there, purchased 96,000 Bitcoins over a 2-week period in early February from prices between 8,400 and 9,500. In other words, I refuse to believe that a price is anywhere remotely close to current levels, yielding a chump change valuation of an asset that, with increasing clarity to an increasingly large swath of humanity, has the potential to become a major asset class, that relentless buyers far more powerful than today's sellers will be waiting in the wings to support prices before the inevitable commencement of the next parabolic surge, signifying an equally powerful increase in user adoption at the expense of legacy financial and monetary systems. Thanks, and have a great crypto day.